And wanting to make a very quick, I want to go through actually some details and nuance of condo financing. Okay. I actually have a lot of my clients that especially over this last 12 months or so, since, rates have gone up, prices have gone up, a lot of affordability has tightened. That means a lot of our clients, buyers, shoppers are in the market right now, presently, for the most affordable housing options they can find. Okay. With that comes condos, right? So condos and townhomes, obviously operate a little bit differently, but they generally will offer a much higher value proposition to especially a young family, single income household, first time home buyers, because of the price point of said condos or townhomes. Now, specifically, anytime that we're talking about condo financing and eligibility, right? We need to make sure that we're doing two different things on the lending side. We are not just qualifying that borrower, but anytime we're purchasing a condo, we need to make sure that we're also qualifying the condo. Okay. Now, what does that mean? I have this conversation so often with many of my real estate partners on exactly what does it mean to have a condo be financing eligible. So that's what we're going to go through today. We'll have a little conversation about kind of, again, what does condo financing eligibility mean? How do we qualify the condo to make sure that it is eligible for purchase, whether that's, again, you using an FHA loan, a VA loan, a conventional loan, or if needed, a non QM for a non warrantable condo. Okay. So we'll get into some details on all of the above. But again, as I'm always trying to bring as much value as possible to each and every single one of you as your favorite mortgage partner here in our community. Here we have it. Let's get into it a little bit. Okay. So first, what does condo eligibility mean? Okay. So we have anytime that we're looking at a condo, okay, let's just say, for example, actually, I have it pulled up here on my other screen. Let me see if I can share my other screen here. Hold on one second. Okay, so we should have here on the screen, I've got Zillow, right? So I actually have right now home type on Zillow, condos only, showing us all of the condos that are for sale here in the South Henderson area where I am currently at. As you'll see here, we're especially in this particular price range, right? When we're talking about a young family, single income household, first time home buyers trying to qualify between that $200 to $350,000 purchase price here in Vegas, especially with our median income price point kind of being in that 450-ish range, depending on where in town you're at, financing or trying to purchase a condo does make, it's a little bit more appealing to some, younger families. So, okay, what does that mean? How do we, make sure that again, condo would be eligible for financing to make sure that borrower is not spinning their wheels, that they're able to actually move forward with a purchase on that condo? Well, the first thing you would do is you would first take a look at said condo. Okay. So anytime I have any of my buyers that are out in the market, fully pre-approved and shopping for whether it's a condo, townhome, or single family residence, I'm always letting them know to send me the property address that they're interested in ahead of them even looking at it, viewing it, submitting an offer on it, obviously, and then, of course, moving forward with an offer, most definitely. But I always want to know what the actual property is that my client is looking at and interested in, especially if it's a condo, because I need to make sure that condo is financing eligible. Okay. So, for conversation reasons, let's take a look at this condo here in McDonald Ranch. We're going to go ahead and pull it up. Uh, Okay, so here we have A30 Carnegie Street, Unit 414, and it was built in 2003. It is a condominium as listed here on Zillow. We're going to go in. This particular condo has an HOA of $223 a month. Now, let's also remember, too, anytime that you're looking at a condo, specifically on condos, you're generally going to see higher monthly HOA payments. Okay, so two things with HOA payments you have to remember. On the qualifying side of things, as a home buyer, the monthly HOA amount or quarterly HOA or annual HOA is not going to be part of your monthly mortgage payment. However, it will be a part of your debt to income ratio. Okay. So if you're primarily looking at condominiums, you need to give the mortgage lender or broker that you're working with an idea of an average or like a max ceiling amount of what you think those HOAs may be, right? We can always reverse engineer these things. And of course, it's up to your mortgage partner to make sure that you're set up for success as much as possible. But just remember too, monthly HOAs are factored into your debt to income ratio. Okay, so let's keep scrolling down here because there is going to be a very important piece here, which I think throws a lot of people off when they're looking at financing eligibility. This is actually in the way of our real estate partners as well, and it comes to okay, is this condo approved? Let's just call it FHA approved. Okay, we're gonna scroll down here. This particular condo right here, you'll see where it says listing terms. Okay, so listing terms shown on Zillow, Redfin, what have you, and then even on your MLS report means what kind of financing is that buyer accepting? Okay. That does not mean if the unit itself, the condominium itself, the HOA itself is approved through these different financing mediums. Okay. So just because in the listing terms it says that it's accepting conventional FHA and VA, it does not automatically mean that that condo is approved for especially FHA and VA loans. That is something that you have to vet out and do your own research on. Because I would guarantee you, I would say about 80 to 90% of real estate agents, they're not going through what I'm about to show you here through the FHA HUD website to make sure that that condo and HOA specifically, has a current, active, and unexpired FHA approval, which is what we need to do. Same thing with VA. And then there's also ways to check with conventional. Conventional is generally a little bit easier, but we're going to get into that more here in a second. Okay, but again, this example down here in other listing terms, it says that it's accepting financing from all options. Okay, obviously cash, conventional, FHA, VA. Now, what we're going to do is we're going to actually look up this particular condominium because I want to know if it is truly financing eligible for both, most importantly, FHA and VA. Okay, let's take a look. Let's scroll back up to get the property address. We're going to copy this number 414. Okay, so here is the FHA HUD.gov lookup tool. Okay, this is what every mortgage broker, every mortgage banker, lender, etc., uses to first vet out the financing eligibility of a condo. Again, ideally before you get an offer accepted. Okay, if it does not pass this test, then you do not have a condo that is going to be eligible from the beginning. That would mean you would need to then pursue something called a spot approval, an individual unit approval, which is entirely different process when financing a condo. Some lenders don't do them at all, and you need to make sure that you know what you're doing ahead of time. Okay, but let's just see here. Okay, so we have our condo. We're going to search by condo name. We're going to search in the state of Nevada. We're going to search in the current county of Clark. I forgot. We don't need the address. We need the condo name. So we need to go down here to the condo name. Horizon Hills is the name of the condo. Horizon Hills. This is in Henderson, Nevada, 89052. Henderson, 89052. All. Okay. All right, this is a good example because here we have it, Horizon Hills condominium. So we will go through this together just real quick. Again, we are on the HUD.gov website for the condo FHA lookup tool, okay, which is what we're using right now. And you'll see here, you'll have an actual listing for Horizon Hills condominiums, okay? You'll see here that this particular condo unit was approved at one time, but in the red right here, right, you're going to see expired. So it was approved, but it is not currently approved, okay? It expired, the actual condo eligibility approval expired September 30th, 2011, okay? Also shows right here, expired. What does that mean? So that means since 2011, when this expiration happened, that this particular condo community has not had a community eligibility approval through FHA, through HUD in the last 13 years, almost 13 years. Okay. So if my client was looking at this particular condominium, I would know right away we do not have FHA approval to move forward with an offer on this property unless we were able to then submit an FHA spot approval. Okay. Spot approval, I'm gonna have to get into a little bit more detail here later in the video. We'll talk a little bit more about that. But not every single lender, again, with me as a mortgage broker, luckily we work with over 40 different lenders across the country, and we have access to different lenders that do different things, right? In this exact case, we would need to make sure that we work with a lender that would allow and facilitate an FHA single unit spot approval. Okay. Now, what are the things that, let's take a look here if I can drill down a little bit further. Mm, Okay, it doesn't have anything specific that's telling me kind of why or what moving forward that it wasn't renewed for or has a recent approval for. But let me give you guys an idea of some of the things that we would be looking at from lender facing that would make a condo project or HOA ineligible. Okay. So one of those is investor concentration, right? We need to make sure that the concentration of investors to actual primary residences, owners of those properties aren't over a certain threshold. Okay. Condo budget, condo deferred maintenance, condo insurance. There's many different things that makes specifically us having to qualify that condo and whether it would be eligible or ineligible for financing. Okay. Anytime that we have a fully vetted condo that is eligible for financing, that is what would be called a warrantable condo. Okay, that condo can be warranted for financing and is eligible because it meets all of these different criteria that we then have to get verified evidence for from the condo or HOA. If we have a condo that is ineligible because of one of these or all of these different reasons that it might not meet the criteria of, right? Maybe there's too many investor concentration. Maybe they don't have any active insurance or an insurance policy for the project that is not sufficient or doesn't meet requirement. Maybe they have a deferred maintenance or budget issues. There's so many different elements of condo financing that could be issues and problems if it's not already approved. Okay. So those will just give you a little bit example on the FHA side of things as far as what we're looking at and what we're trying to identify when we have especially a government financing client, right? FHA or VA. Now, let's take a look at the same exact condo on the VA condo tool to see if it has VA approval. It probably won't. Just a heads up, anytime that we have FHA, FHA approval, we generally will have VA approval, vice versa. Now, if we don't currently have FHA approval, there's a good likelihood that we will not have VA approval because, again, they're both government entities, government insured entities, and generally they share a lot of the same information. Now, that's not, across the board all of the time, but I'm just guessing here on this particular condo. So, again, our condo name, Horizon Hills. Our regional office for VA here in the state of Nevada is in Phoenix. Make sure that your mortgage partner knows that because the regional loan center that you work with as a VA client is very important on the lending side because that regional office is who we reach out to anytime we need something done for that VA client specific to their home loan. So that is Phoenix, Henderson, Nevada. We'll put Clark here just to see. Okay, here we have it, Horizon Hills condominium. Let's see what we got. Okay, so this particular one does show that there was a HUD acceptance, which we knew. Okay, this particular little report result does not tell us that there's anything more than just a previous approval, which we already knew from the FHA approval that we saw here, right? Status in 2002 was when it was originally approved. Looks like it was originally approved here with VA in 2005. And of course, as we know, it has since expired via the FHA website, right? The HUD website on September 30th, 2011. Now, in the VA portal, okay, this is for all my realtors out there. If you were using the VA portal, which again is the lgy.va.gov LGY hub for condo reports. So you can just type in Google search VA condo lookup tool. You'll be able to do exactly what I'm doing through the VA loan guarantee website. Now, if this was a condominium project that was accepted for VA financing without conditions, it would say right here where status says accepted without conditions. Okay. That would mean that on our end, for that VA client, what we would do on the lending side is we would take a screenshot. We would print this page as a PDF. We would upload that to the lender and we would let them know that this particular condo is accepted without conditions from the VA portal. Okay. There's a couple other things that we have to pull from the actual VA website specific to that property, that project having acceptance without conditions, but it lets you know from the very beginning that we should not have any issues on that particular condo. With this status, HUD accepted, does not say accepted without condition, does not say anything about acceptance current and active. We're probably going to have an issue. Okay. So just some quick examples there on exactly, okay, well, we were on the Zillow. Okay. It shows on my MLS sheet that they accept FHA and VA financing. However, we just pulled up evidence that on both the HUD.gov website and the VA website that there is no active approval. Okay. That's just one example. Let's go into a couple different more to see if we get one that is actually approved that states that it's it's accepting financing, to see if any of these are actually accurate and what the importance is of course, making sure that honestly, if I was a realtor, I would understand and learn how to do this myself. That way you didn't have to rely on somebody like me in the, your mortgage partner being as savvy and as with it and as ready to kind of drill down as far as possible to make sure that you and your client don't have any hiccups, don't have any roadblocks, are able to get through to the finish line without any surprises. One thing that we never want to have, and one thing we're always avoiding as somebody, a local mortgage expert like myself that's been in the business a long time, we're always trying to avoid surprises. You don't want any surprises, right? Your mortgage pre-approval with us is rock solid. All of your income, employment, assets, credit, and debt items have been already reviewed and vetted. They've already gone through automated underwriting. We've already vetted the condominium project if you're buying a condo to make sure it's approved, so on and so forth. So again, you don't want any surprises. You want to make sure that you're doing your due diligence and homework. And if I was a realtor, I would become very familiar with the HUD.gov website and the VA website to go through to see if these condos are approved eligible. Okay. That even goes on the listing side. If you're listing a condominium and it's not approved for financing, but you're accepting the financing, again, it confuses a lot of people, right? That's why you need to make sure you're working with the right mortgage partner. Give me just one sec, guys. Throat's getting a little dry. That's some good water. Okay, let's take a look at another one. Let's go back to search. Let's pull up this. Let's pull up this one over here on Bermuda and Cactus. That's a condo? Huh. Pretty nice looking condo for $335. No show at this time. Okay, that's weird. Okay, let's see if we have. Okay, this one also says. Oh wait, this one actually might be a townhome. Let's take a look real quick at the property tax records. This is another thing that you need to be absolutely sure of anytime that you're purchasing, of course, is the property specifically a townhome or is it specifically a condo? Because those two things are dramatically different. I'll explain here in just a second. So, single family residential unit row townhouse. Okay, so this particular property looks like it actually very well may be a town home, not a condo, which would be fantastic, especially in this price point, man. $335, that's pretty nice for a townhome. Like a 2-bed, 3-bath, nice. But okay, anytime we have a townhome, it's much different than a condominium. Okay, condominium, because of the condo specifically, it's an attached unit and it's in a specific HOA area, right? We need to make sure that that condo unit is financing eligible. With a townhome, it operates a lot more like a single family residence where we don't have to specifically qualify that building. Okay, we don't have to qualify the building or the HOA, right? With a townhome or a single family residence, you're qualifying the borrower. just as regular. And we're making sure that we verify property taxes. We're making sure that we verify, all title work. We're making sure that we verify via appraisal. And then that appraisal also states that it's a townhome, but it operates more like a single family residence. So in this exact case, this does say for some reason here that it is condominium, which in fact it is not. It is a townhome as verified by the property tax records. So, okay, let's go back. Let's take a look. Another one. These over here in Salvador Ranch, I think this is Park Avenue. No, this is not Park Avenue. All right, well, let's take a look at these. Oh, I actually think I had a client of mine just recently buy a unit in this condominium complex. Possibly if it's the same one, but let's take a look. Okay. Okay, this particular condominium complex says that it is accepting all financing options: cash, conventional, FHA, VA, and owner will carry. Ooh, fancy, fancy creative financing. Okay, wonderful. Let's take a look. Let's go to our FHA website with Montana Condo. You're going to go back. Condo name, Montana. This one is in Las Vegas. This one is zip code 89183, if I remember right. Yes. All right, let's see if I remember correctly. Okay, here we go. So Montana does have an existing single unit approval. Okay, so it's gone through the single unit approval process prior. However, it does not have a current FHA approval. Okay, so this particular condo, again, because of investor concentration, it looks like was not approved for FHA financing. It does not have an existing FHA approval. However, it may be registered as a single unit approval if your lender works with spot approvals. That's what it's called, spot approvals. Okay, let's look up Montana condominiums with VA. Montana, Phoenix, Las Vegas, Nevada, Clark. Uh-oh, can't find this one. Montana, let me try Montana condominiums. Oof, okay, so here's the last that we can look up, and this is a true master condo approval list that we have through one of our preferred lenders with UWM, which actually will print out and show you all of the different either accepted, fully accepted, limited review condominium projects in each state. Okay, so let's go ahead and let's search. Let's search for Montana. Nevada. So just manually search. Nevada, Clark. Okay, also not showing on here. So as you see, we don't have any evidence that the current Montana community is qualified for anything other than a single unit spot approval. Okay, so we go back to the listing here. For 555, it shows that they're accepting all financing listing terms, but we do not have an evidenced FHA, VA, or conventional approval across the board for the HOA complex. So very important, guys. Very, very important that you drill down and take a look at these different things as far as what is condo eligibility. Okay, so again, anytime specifically you're using FHA or VA, you need to vet out the property itself beforehand to see if it has existing condo financing eligibility and approval. Again, you can do that via the FHA HUD.gov website. So you can Google FHA condo lookup, It'll give you the website right there, and you need to make sure that when you're in here that you're inputting specifically, right? In the condominium list right here, you're going to search by condo name. You're going to make sure that you put the state of Nevada. You need to type in Clark. You need to put in specifically the name of the condo or HOA project, right? Right here. You need to put in what city, what zip code, and then that's it. Then you can just go ahead and search, right? Boom. For VA, it's much easier. Again, you can just Google search VA condo lookup tool. It'll bring you directly to this website. In here, again, you're not going to need as much information. You're just going to put the name of the condominium. You're going to put the regional office with that you're searching for, which again is here in the state of Nevada. Our regional office is Phoenix. You're going to put what city, what state, and then optional, you can put Clark County as well. So those two tools, especially for you as a real estate agent in this market or any market, is going to allow you to approach both your sellers and your buyers with more confidence, knowing that that particular condominium and HOA is approved for financing. So trust me, if you're in this business, and especially as a real estate agent, maybe you're a mortgage lender, you understand how frustrating the nuance with condo financing and eligibility can be for us as the professional in the industry, right? So we want to make sure that we go through we do our due diligence, all the homework that's needed. That way the client, your customer, and that person that's going to hopefully be super, super duper happy with your service, sending you all these referrals, does not go through those same frustrations when trying to buy a condo. Okay. So again, not only setting ourselves up for success all of the time, but we're always trying to service the client and setting them up for success as much as possible, as quickly as possible from the very beginning. Now, last but not least, what are the workarounds to condo eligibility? Okay, so if something is not condo financing eligible, how can you buy a condo, right? So if we have vetted out that particular condo or HOA project, it's not, someone's trying. This is going to be a little bit more for people trying to put down less than 25% down. That does change things a little bit when you're putting 25% down or more. But let's just have a conversation around, okay, you're putting down 25% or less, right? Our first time home buyers putting 1 to 3%, FHA putting 3.5%, VA, 100% financing, not putting any money down. We need to make sure that that condo project, HOA, unit, everything is eligible for financing before submitting an offer. Do your due diligence, do your homework, make sure. If you're putting down more than 25% on a conventional loan, that particular condo project is going to need to provide and supply less information and documentation for its eligibility. Okay. So if you're putting down more than 25%, we're only going to need, for the most part, what's called a limited review form. It's like a little condo questionnaire that the condo and HOA has to fill out. If it's filled out correctly, if everything meets the proper guideline, we're good to go. We don't have to collect like on the other side. Anytime that we have to verify, do a full approval, spot approval, we have to verify and collect the income and budget information. We have to get a full HOA and condo package. We need to make sure that the insurance policy is in place for the right amount and correct. We need to make sure, again, the investor concentration versus primary residential holders is correct. So many different elements and moving parts to condo financing if and when you're putting down less than 25%. Now, in the event that the condo itself is not approved at all, even if you're putting down more than 25% for whatever reason, the condo is not eligible for financing, you then have what's called a non-warrantable condo, okay? Non-warrantable condo financing is something that's done specifically through different type of financing and lenders, which is what would be called a non-QM lender. Okay. These particular lenders would not have to meet traditional Fannie Mae, Freddie Mac guidelines to be able to allow and provide financing. So these particular non-QM lenders will allow a heavier, more robust risk threshold for these particular condos that don't qualify for traditional financing. Now, the majority of the time on a non-QM, non-warrantable condo purchase, you're going to, at a minimum, need 25% down or more. Okay. With a non-warrantable condo, you're also going to have a little bit higher of an interest rate, right? That's obvious. It's a non-warrantable condo that requires specific type of financing that again is a higher risk for the investor. That investor then passes some of the risk down to you as the buyer with a higher interest rate, okay? But there are ways around it. Of course, this is always there's a lot of nuance to the mortgage and financing business, right? When you're borrowing hundreds of thousands of dollars from an investor or millions of dollars for a particular property, right? They're going to vet out and make sure that it's not just you that qualifies, but that the property also qualifies. And that could never be more important and more focused on than specifically when you're buying a condo. So I hope you guys enjoyed that. That was a lot of information about condo financing and eligibility and how you do it, how you look it up, what you need to make sure of, and then, of course, the different roadblocks to avoid or make sure that you are asking your mortgage partner when you are looking or before you're submitting your offer on that condo. If you guys have any questions, please make sure to leave a comment below, send me a DM. Mario with the Escobedo team. I'm always available to you guys day and night, afternoon, evenings, weekends. Your local mortgage experts. We're always here to help. Guys, remember who you partner with matters. Hope you guys have a wonderful day. Take care. See ya.